2021. In this session, we are going to discuss financing auction and the state of it for small businesses. Uh, just to put in perspective, there are 63 million small and medium enterprises in India, which contribute 30% of the nominal GDP and 48% of the exports. While we all know and discuss that agriculture engages the highest number of people in India, it goes unnoticed that these businesses employ 110 million people, next to agriculture. So yet, if we look at the access to finance of the total lending exposure of institutions, only around 26% go to these businesses. The credit gap is around $230 billion, and some reports even quote the number higher. So, to discuss more about this, we have a panel of experts who are solving the issues and shaping the space. We have with us Mr. Sachindranath, Executive Chairman and Managing Director, You Grow Capital, Mr. Manish Lunia, co-founder Flexi Loans, and Mr. Amit Mandhania, Business Head, Retail Initiatives, Northern Arc. Welcome, gentlemen. Uh, I've already quoted some numbers, and now I'm going to, quote the RBI Governor Shaktikanta Das from one of his recent speeches. He said, "The sector has been rendered especially vulnerable by the pandemic, necessitating concerted efforts to combat the stress and focus on revival of the sector." So, very briefly, if I can come to you, everyone, one at a time, and if you can tell me your reading of the space at the current moment, how do you see it? Sachin, if I can start with you.
Thank you, Saurabh. So you are absolutely right. I think so. The with during the pandemic, the sector which was hardest hit was SME and micro SME sector. The reason for that is, as you know, that the margin at which most of the small businesses operate is very small. It's 10 to 15%, which means a 3 month shutdown can wipe off the entire cash flow or the profitability for a small business for a whole year itself. A 6 months of shutdown of business, put an existential crisis for most of the small businesses. And this problem has got more severe with respect to the availability of capital and credit for SMEs. Because generally, with that aspect in mind, most of the lending institutions virtually withdrawn from any form of financing for SME. Fortunately, because of the government initiative of emergency credit line, the partial credit guarantee, obviously there was quite a bit of support which came. But I think so this whole within the credit industry, this generalization that all MSME would eventually die down is what has created the biggest problem. If you look at Ugro's business, we focus on 8 large sectors of MSME market in India: healthcare, education, food, beverages, hospitality. So if you take the word hospitality and if you talk about MSME of hospitality, general perception is all hospitality businesses are going to be dead. But that's not true, honestly. Within the hospitality, banquet halls are suffering more. Fast food process, food process, people who are doing fast food delivery are not suffering that much. So I think so it's the time of, there are two part of it. One, SMEs and micro SMEs, some of them have to also, self-realize who can survive and how you survive. Second, for credit institution, this is the time to use data analytics, use deep, sector and subsector analysis, and figure out a way and take a little bit of futuristic call in terms of which businesses can come back to the normal cash flow and start providing the credit. So there is no doubt that the sector has suffered, is continued to be suffering, but simultaneously, this is the sector which will come back to the revival at the fastest pace, because the tenacity of an individual entrepreneur in India and his ability to fight is highest vis-a-vis any mid corporate or a large corporate. And we should, India consists of, these entrepreneurs, these people, and their fight to live, survive, and then grow every day is undeniable.
Great. Yeah, I know you talked about tenacity and grit. We'll come back to that later. Amit, your reading of the current situation, how, what is your understanding?
Clearly, I agree with what Sachin just said. And we also work with around 200 NBFCs, out of which 50 of them are focused on MSMEs. And we were looking at the data over the last 9 months as to how these MSMEs have performed. And some of the data that we had in terms of repayment behavior is really supporting what was just mentioned. So if you look at the pandemic, it affected initially in the first 3 months very much because the supply and demand shocks were widespread, right? The MSMEs had to not only manage the demand side but also supply, which affected their margins. In those periods when the collection efficiencies of our underlying loans went to 40-45%, over the last, if I look at December data, we are looking at collection efficiencies coming back to 85%. Now, this is a drastic change from what was 45 to 85. Obviously, the initial recovery was higher. Interestingly, I think, as Sachin said, there are sectors which are affected more, and one has to look at the nuances better, right? On those sectors also, if I look at, um, if you look at entities or MSMEs who have not been able to make any repayments over the last 9 months, or maybe make only one repayment over the last 9 months, there are some 6% MSMEs who have not been able to make the repayments, largely because they are in sectors which are affected the most, like the banquet halls and the stuff. Clearly, there are 93-94% MSMEs who have been able to come back, make payments, and which is demonstrated in the recovery in terms of collection efficiency. Over the last 3 months, some of these sectors which are affected much more, the ones I spoke about, are also coming back, and that those trends are showing. So I guess it is going to be a smooth recovery over the next few months. Hopefully, if, things are fine and the pandemic doesn't go again. That's what I think. So there has been an effect, but I think the entities, the MSMEs have been able to come back. We should see more of this tenacity playing out. Yeah.
Thank you, sir. Before I go to the next question, I'll request our audience to keep their questions coming. If you have any, we'll take them up at the end of the discussion. And for gentlemen, if there is anything you want to point out, I may be pointing questions to any of you, but if you want to, pitch in somewhere, just feel free to do that. So, Manish, coming to you, what's your take right now? And also, I would want to add another point here is that if there were non-repayments during the past, 9 months or a year or so, has it changed fundamentally any of your outlook towards the business?
Yeah. So I think sort of what's important, like Satindra has been mentioning and Amit has been mentioning, is that you look at cohorts. The outlook towards cohorts of more impacted segments, sectors, geographies have changed. Right? We know that education is all going online. We know that food in the restaurant businesses are becoming unviable with 50% capacities right now, but the cloud kitchens are not impacted as much. I think India is eating more via cloud kitchens than pre-COVID probably, right? So what has happened in this time is to say, hey, online is doing very well. I think it's grown. A lot of the entrepreneurs are moving online, selling their products online, services online. I think the kids are doing classes online. So a lot of freelancers are doing that stuff, which they used to hire a real estate space earlier, called 20 kids up. Now all that can happen online, and people are accepting that medium. So the outlook, I think obviously there was a lot of shock in the months of April and May. We were all trying to understand what not to do, what to do, because the collection efficiencies went to that 50%, 45% range. I think it's coming back very well. There are a 15-20% of overall borrowers, at least, and I'm assuming this is then true for most MSMEs as well, that are impacted. They're badly impacted because I think those 6 months, 3 months kind of impacted. So some of our customers, for example, on the grounds, stored lakhs of rupees of cold drinks, and in a lockdown they could not sell those cold drinks or ice creams, and then they got wasted because the administration did not allow them. Now these are mom and pop stores, and for them the margins were very thin, and they lost stuff. So the optimism has come back. I think many of us are now helping these people who have otherwise in the past paid, except for this moratorium period. Just like 2008 was a crisis, I think this crisis is being looked at by lenders at least more favorably, and say, hey, if the person had the intent, is now coming back on his heels back, let's help him out.
You talked about a crisis. So, demonetization, GST, and now the pandemic, small businesses have been, receiving successive blows. Yet we all say that small businesses hold the key to economic turnaround. Now, if we realize their, resilience level, or as such in the said tenacity level of the sector, why is it that we see that the access to capital still remains a challenge, or shall I say neglected? Manish.
Um, so again, I think the access to capital, I believe, has increased personally. So it is not access. I think, for example, monthly people applying to flexi loans is now about 2 lakh people, MSMEs across the country. 1,400 cities and towns can now access that capital and get loans from us, right? Likewise, when Northern Arc team supports many fintech entities, and Ugro, I think, does the same. Now we are expanding the access to the hinterlands of the country, right? There are customers with a population of 1 lakh who are discovering us on their Facebook or a social media platform or Google when they want loans. They don't need to now go to the family backgrounds or the money lenders. Get access by giving very thin documentation of their KYC norms and probably a banking, which most of India is now digital in a format, can give via WhatsApp or anything. So the access is increasing, I believe. However, India is still not banking enough. India is still not digital enough. I think if what the minister was also mentioning, if we can actually put the trail, use more digital mediums to ensure that the cash that we get in the galla in the shop is actually going in the bank account, use that bank account in digital. I think a lot of the lenders now are accessing these customers. The cost of capital, which is affordable cost of capital, is another problem, and that's more with how the banks and or the larger institutions are actually lending to the fintechs or other smaller NBFCs. I think that is difficult because of all these issues that happened over the period of time. But I think access is improving, in my opinion.
The cost of capital is important. We'll come to that later. But Amit, we were speaking before we started, and you talking about alternate data. So Manish just said that the money that is coming to your galla, you put it into a bank or other things. So is that some kind of data that we really that SMEs need to improve on their end so that their access improves?
Clearly. So if you look at the new NBFC models and the business model which have come up, clearly there has been a focus on acquiring the customers differently, acquiring data differently, and underwriting in a different manner. And most of it is supported by digitization, both in terms of access to customer and the data. Uh, if MSMEs embrace digital payments, maintaining or maybe working more online, obviously they will create trail and data which can be validated by NBFCs very clearly and easily. And that will support, underwriting turnaround times and also what sort of credit, the right kind of credit in terms of tenor, pricing, and quantum that they can access to. So clearly, we have seen coming up of these models which have been successful. The portfolio quality under, some of the NBFCs that we work with has been much more better compared to, what you'd see in a larger institution, maybe a bank. Because these are differentiated approach. You need to understand the customer better. You need to have a differentiated approach in terms of underwriting, which is very well done by a lot of NBFCs that we work with. And if MSMEs also support embracing online mechanisms, I think the alternate data will increase further, which will support the overall ecosystem.
Mm. Okay. So, among the sectors we were speaking to, Sachin, I'll come to you. You said about 8 sectors that you support. So, is it that it's easier for some of these sectors because they have a good track record, and that is why you selected these 8 sectors, or how is it? I mean, is there some sectors which perform badly, the others which do better, is because of their cash flows, maybe, or because of the nature of their business that they do?
So, our approach, Saurav, has been this. The perennial problem of lending in India. Think of this. I come from a small town. Think of this: that there is a bank lender who goes to two kind of borrowers. Keep giving this example all the time. A first borrower is a dentist who, if you go to his place, there are 50 people sitting outside in his OPD clinic, and looks at very busy doctor. And second is the IVF clinic, wherein if you walk into his place, probably once in a week or twice in a week, there will be only two people who will come. Now the challenge is the way the underwriting at the banks is done. If a bank's underwriter would go, he will ask the same question to both the doctor. Sir, आपके पास OPD में रोज कितने पेशेंट आते हैं? डेंटिस्ट वुड से 50 आते हैं. IVF क्लिनिक वाला बोलेगा 1 आता है. And the first impression the underwriter would get, अरे 50 जिसके पास रोज पेशेंट आते हैं, ये अच्छा डॉक्टर है. IVF क्लिनिक वाले के पास एक ही पेशेंट आते हैं, ये खराब डॉक्टर है. Because there is no way for him to realize that IVF clinic per patient is 7 lakh rupees, dentist per patient is only 500 rupees or 1,000 rupees. And this is, you can take this to multiple levels, right? We call it non-homogeneous and sector. SME is not a homogeneous sector, what you can do in mid-market corporate or a large corporate. Now, if you have to solve for this problem, only deep specialization by sector, product, or geography can only work. So our philosophy of, because we said if we have to solve, our mission is solve the unsolved. We said we cannot solve problem for everyone. We can only solve problem for some. And that's why filter down to certain select sector, which are large enough. So our 8 sector contribute 50% of SME credit market in India. Within that, we do 100 subsector. And then we design data, process, policy, and we are just at 10% of what our mission is. But that was the reason why we selected sector and subsector. And that's why we now have come, actually pandemic has been helpful, that we don't believe that hospitality, by just general word hospitality, is bad. We have created a mortality rate. Banquet hall has 90% mortality, cloud kitchen has 10% mortality. But you can only do that once you get to that level of deep understanding of the business. That's one. Second, I think so, which is the earlier question. See, the problem of the lending, and Manish would definitely agree with me that it's unlike consumer businesses, marketplaces, Amazon or Flipkart, we are a tri-pronged, right? So at the one side of it is the provider of credit to us, and the other side is the consumer. The first portion, the provider of credit to the institution, is still, and if I may say that word, still is in the primitive world, right? Because we can solve the problem at the front end, but we can't change and solve the problem at the back end, which is our lending institution. उनके लिए आज भी lending to SME मतलब collateral होना चाहिए, property होनी चाहिए, सिबिल का score होना चाहिए, and all kind of तामझाम, right? So any level of innovation you do on the front end get finally curtailed because your ability to raise capital, especially debt, is very severely impacted. On the other side, from the SME, I know people blame GST and DMON and other things. The single factor, because of GST and because of data aggregation coming through OKIN network and account aggregation, you would see explosion of credit, right? Because the formalization of economy for SME between these two parameters, banking and GST, can explode and take the entire SME financing from collateral based to cash flow based. It is yet not being understood in a very clear sense, but I can tell you in 3 years' time, what happened to the payment industries in India through this digitization of GST and banking. You will definitely see that to happen in the entire MSME finance.
And Manish, coming to you, so Sachin just said, the things that have happened in the payment sector would happen, here, and you were there at the forefront, facing those challenges. What do you believe is that needs to be like, there is a bank, there is an MDFC, then there are the fintechs, and then there are SMEs. So in this entire chain, where do you think the biggest hurdle lies? Obviously, the credit, origin is a problem. So if that is a problem, it percolates down to even even at the last hurdle. So do you think even solving at the last mile, you will be able to create a difference as big as you would have wanted if the problem is not solved at the highest level?
I believe so. Saurabh, I think my favorite example is that if you can actually deliver a 50 rupees shampoo to the 650th village in the country today, 650 lakh village in the country today, like the minister said, affordably, viably, then if you can build that network in that village or the lowest town, who can actually service very simple, go to a customer, guide him to take a loan in a very transparent manner, but do the last mile fulfillment, because India is a very diverse country, very many different languages, different literacy levels on language, etc., and so on. I think we will all get there, right? I mean, the multi-faceted ways of reaching the customer will increase, but this is very much possible. And so we are there with about 60% of MSMEs, in fact, country now having bank accounts, about 95% of MSMEs now using internet banking. I think it's very much possible that way. So the last mile is the biggest problem to solve, I believe, obviously, because there's a huge amount. There's 7 times more informal credit happening in the country than what formal credit is. These are only know in beyond the top cities and towns. You know that there's a local guy who's running a chit fund with tens of twenties of people. There's a large microfinance industry which today borrows in a formal manner, but also accesses on the mobile phone or WhatsApp offers from people like us, and they can actually get a loan without going every day, etc. Take for a longer duration, very transparent on the mobile phone in a language that they want, right? So that is one definite problem which remains to be solved. We will solve it. We are at it. But I think today the larger problem is there's a lot of regulations around it, right? The KYC norms are not easy. I think that banking is a regulated entity eventually. So I think one piece, how do we work with the regulators to make it smooth? I think Sajindra asked that question itself to the minister as well, right? Think of this one question somebody asked from the minister, and that is the first question because I think there's a lot of regulation. And the second piece is capital. The our lenders. I think if these two things come well, I think ground hum solve kar lenge.
Okay, good. I like that optimism, and I wish that that is done because that is required if the economy is to run. Amit, I'll come to you with a separate question. So, we have so many schemes. I actually kind of wrote down a few. There is Mudra, there is Credit Guarantee Fund Scheme, National Small Industries Corporation Subsidy, and during the pandemic, obviously, for Emergency Credit Line Guarantee Scheme, Credit Guarantee Scheme for subordinate debt. There are so many, and there is so much of money that is, allocated to these, but still we find problems. So, I mean, if we have to address, if we have to call the elephant in the room, what is it?
Sure. I think all the initiatives and the schemes that you spoke about have been welcome. They do have, I think, enough that have supported the sector at the right time. But yes, there is more to be done. And the problem is not that there is lack of money. The problem really is that I guess we need to look at a collaborative approach between banks and NBFCs. They need to use the complementary skills. NBFCs, as Manish said and as Sachin said, can solve the problem. So they understand their customer well, they will solve the ground problem. Now, if banks start creating what these NBFCs are trying to do, which is going to be very difficult. So the approach could be to sort of collaborate with NBFCs, either through co-lending mechanisms or through other mechanisms, wherein the access to finance at the last mile can be provided through the NBFC partners. And I think there are regulations around that, which are again, I guess, yet to be utilized in its full form. So a lot of money is flowing. It is also flowing to the sectors which are already getting money. It's not that new customers are getting onboarded. So most of these schemes have benefited the already customers who were there. But going forward, if you want to increase access, I think banks will have to work with, they'll have to look at NBFCs as their front end arms and work with them in terms, utilize complementing skills, letting them to sort of originate and distribute, and at the back end understand them better and support them.
Okay. So, Sachin, I'll come to Amit said that money is not the problem, and money is going to people who are already in the system. So I think that is the first problem. That how does one get into the system? And I was seeing some data, and it's not India specific. Even in on aggregate around 5,200 billion dollars is the credit gap for SMEs. In the developing countries alone. So it's not an India specific problem. It seems that when uh, a person has to get into the system, and once he gets into the system he's okay, but the problem is getting you know getting across that hurdle. So how does one do that? Does one address that problem? And if
So, Saurav, this would not happen in in 1 year, 2 year, 5 year, 10 year.
we've been talking about 10 years about getting
Yes.
SMEs to on feet now.
Yeah. So this is so so if India's credit gap for MSME, only 10% of MSME high in India have access to formal credit. The credit gap for India on a reported basis is around $350 billion. I keep saying our mission is to take 1% market share for MSME financing, and 1% market share itself constitute roughly around 25,000 crore. So you can understand that even for people who have aspiration of size can also not solve for these problems. This is not going to happen. So let's realize that first. Second is the problem of changing the mindset. Both, as I said, large institutions, lending institution, but more so the small businesses themselves. I'll give you one example. So changing our mindset is also a journey for us, right? Because people who come and work for us also come from traditional credit institutions. When pandemic hit, I made it man. So I launched what we call 100% digital mission. We said everything which can be done digitally would be done digitally, right? So one of the credit process is that every time a loan gets sanctioned, a credit underwriting officer would go and meet the customer. We said, no, this can be done digitally. We are doing this web conference, right? So why the same credit exercise cannot be done digitally? So we launched the complete fully digital video KYC. But obviously, to do a video KYC and video PD, one of the requirement was that your mobile number should be linked to Aadhaar. You would be shocked to know within June, July, and August, 3 months, 60 or 70% of our MSME customers, their mobile number was not linked to Aadhaar, and that's why their video KYC failed. Right? So when we say that MSME has to be digitally enabled, we don't want them to make great website or create marketplaces. Digitally enabled, when you can go and buy things on Amazon and Flipkart and buy books, do everything, this is essential. Number two, today also, when we ask each of our small businesses to give their banking access through an OTP, which is much easier, rather than giving bank statement, which we scan, convert into an OCR and all of that, 90% of MSME thinks that lender is some kind of leech who will take my banking data and do what, right? Obviously, so it fails. GST, because if I take somebody's GST and if I take banking, I can create virtual profile of the customer. I don't honestly need to ask him anything. But generally, MSME and SME have reservation about giving. First, they are not into formal economy, largely, continue to be. So first impression is अगर GST है तो इसको कैसे avoid करें, बैंकिंग है तो कैसे बिना बैंकिंग के बिजनेस कर ले. So sir, अगर प्यास लगी है तो प्यासी कोई कुएं के पास आना पड़ेगा, कुआं तो उठ के नहीं चला जाएगा, right? So that is what the SME and business has to understand. You have to be formal, you have to be digitally enabled, so that people who have at least willingness to help you by digitization can actually go to that level.
Okay. Okay. You made a very valid point that SMEs will have to come up and understand what this is, and maybe that's where what Manish was talking about, the language that is used, because we are a diverse country and the sensibilities are different, their understanding is different. So someone at the local level, talking to them or something helps. But then this has been there. I mean, we have seen for ages we have seen this model happening, at least have been tried out, but it has not worked. And now you're asking a person who's possibly not is not literate, maybe, or maybe not very he doesn't understand things, to share these data. So are they, I mean, I have my doubts that whether they will be able to do it even in the short term or even in the long term. So how do we address that, Manish? Any example that you can give, or anything in your experience that you think has worked or can work across the country?
Saurabh, I think one of the studies that is done is you don't trust unless there's a bank with a trusted brand, you don't trust them for your money. But that is when you deposit money. When you borrow money, you don't really care. That's a known thing. So what we're talking about is about lending right now at the moment. However, having said that, because you interact and these are digital mediums, there have been instances of people actually getting frauded for various reasons, wrong messaging and so on. So when we started 4 years ago, I remember customers saying, oh, I can't see your name on the website or your NBFC. So they would go down to say, oh, I have never heard of you guys and so on. Eventually, trust happens. Today, as I said, we are the second largest MSME in the country in terms of the number of people who are visiting us. About 10 lakh people visit our website on a monthly basis. Right now, this discovery, when they see a brand like ours and many others of us, they know that this brand exists for a while. So that issue of that trust of some brand being there is there. It's important. But at the same time, when a guy needs money, communication can happen. You don't need people to kind of communicate in their language. You say, hey, you need a loan, and I can say this in Tamil. Just these two steps. We are an RBI registered NBFC. You can see this. So there are multiple stuff that we write in our FAQs for our customers in multiple languages to kind of help them out. It is for them. Thus, I don't think people have an issue of trust or coming up. I think we have to go down there. Unfortunately, that level of sophistication hasn't happened. That level of trust from the borrowers still isn't there. They still are banking with this. old age banks now are not comfortable with us. So, but I think this is one problem which is going off. Customer problem can be easily solved eventually, slowly. Digitization is one thing. I mean, what 10 million people in the digitized GST network now? 100 billion. What would that number be? अगर आपका 5 crore लोग is the MSMEs and people who are filing returns, 90%, 70% of them are filing quarterly returns, not filing returns for 6 months. How do you actually go to the other segment, which today is doing digital transactions, and now look at the people who are transacting via POS machines? In this pandemic world, I think everybody is using the UPI rails now. That I think country will be a game changer. Payment gateways, embedded finance is the next piece that is going to be there. Like Sajendra was also mentioning, the things. आप Pidilite से paints buy कर रहे हो या बेच रहे हो. Pidilite has all the information at the point of sale. Now Pidilite will offer a service to its borrowers, to its vendors or merchants, saying 6 महीने के बाद में पेमेंट कर देना, आप 1 लाख का माल ले लो. Right? So that is a possibility that can happen, is on the way. I think challenges are only getting solved. What used to exist years ago in terms of communication and language was probably more like people communicating different languages. Now you can standardize communication. The simplified communication is already there. People, I mean, I don't need assets. I don't need तुम्हारा 3 साल से turnover क्या था. I need आपका 6 महीने का GST क्या है. I need आपका business किस segment में है. क्या आप ठीक से पे कर रहे हो? 10 years ago, a bureau did not exist. Now I have bureau history of this guy, what he is doing, right? And it's such a powerful tool. People can actually, over the years, I think 10 years hence, one would not even need cash flow transactions. Basis your bureau history of 20 years, you could be judged and given loans. So I think we're moving into a direction that there's so much data. All of us are trying to figure out what is the right way to decode stuff. And credit is going to be extremely easy. Everybody will run after a borrower. A borrower is going to be a very pricey guy eventually in life. That's my view.
Yeah. I hope so. That
I would say, so just I would like to very quickly add one thing. I think so. One of the behavior. See, when it comes to businesses and especially small business, the general belief have been your net income is equal to amount of tax you save, not the margin of the business. And that has the starting point of the problem. कि अगर मेरे business में 10% margin and if I can save 18% of GST and 30% of income tax, my margin goes up to 40%. Right? Little realizing that if you do that, then your credit availability is judged on much reduced capacity because you're not into formal. So whether your business margin can go from X to Y by being more in the formal segment. So that has to be continuously drilled down to people. More you are formal, more availability of credit, more expansion of your business. And as this keep happening, and I think so SMEs are now realizing that some is force multiplier because the choices of planning of the tax or avoidance of tax has dramatically reduced in our country, and it will keep getting reduced. So as that keep happening, the credit availability would become much, much faster.
Okay, all right. So, we were delayed in the last session, so we'll have to wrap it up a little early. Before we leave, Amit, any parting thoughts before we have some awards, and I would request you to stay back for the awards. So, Amit, anything, as a parting thought, and we move to the awards then.
No, clearly, I think, if MSMEs agree and understand that the cost of informal sourcing is very high because they are not in the formal economy, right? And if they come to formal economy, the cost of capital for them also will reduce. So it's got to be a combination of what MSMEs do, what NBFCs are solving, and what banks can do. And through the value chain, if each of us play the role that we have to, clearly, we would see a scenario where the customer will be very pricey. They will have the right access, not only in terms of the quantum, but also in terms of tenor and in terms of pricing.
Okay, all right. Thank you. I would have loved to continue this session, but we'll have to stop and go to the awards. But my key takeaways is that it's not only the lending part which is a problem. The problem is also from the business part, and they also need to get their house in order if the entire value chain has to improve. That's what my understanding is. Thank you, Sachin. Thank you, Manish, and thank you, Amit, for joining us. Please stay back. We have some awards which Muskan is going to announce now. Thank you. Over to you, Muskan.
Thank you so much, gentlemen. It's been a great discussion, especially Mr. Saurabh. Thank you for pacing it so well. Thank you so much. giving away the awards right now. I would request all of you to please stay back. First award right now, Best Use of Technology in Small Business Award. The award goes to Fermion Infotech Private Limited. High-end IT solutions from the beginning to the end. Many, many congratulations to Fermion Infotech Private Limited. The next award, Homegrown Business of the Year. And the award goes to Avadat Lifestyle LLP. Channels that matter, direct to consumer. Hearty congratulations to Avadat Lifestyle LLP. Our third award, Upcoming FinTech Innovation Company of the Year, goes to EasyFi Network. Hearty congratulations, blockchain-based lending technology company EasyFi Network. Many, many congratulations to you. Best Importer of the Year, TLI TradeLink India General Trading LLP. Their mission is to supply the best quality material to ensure optimum satisfaction of the clients and provide maximum value for money. Hearty congratulations to TLI TradeLink India General Trading LLP. Our next award this afternoon, Human Resource Provider of the Year, and the award goes to NABSPEL, Simplifying Business Complexity for Manpower Augmentation and Technology. Hearty congratulations. The next award, IT and IT's Business of the Year, goes to Successive Technologies Private Limited. Let your neurons run is what they believe. Many, many congratulations to the entire team. Pharmaceutical Business of the Year. The award goes to Maitri Drugs Private Limited. Their vision is to be the world's largest and highest quality API supplier to contribute to humanity's overall well-being. Hearty congratulations to Maitri Drugs Private Limited and to all the winners this set. Once again, thank you so much, gentlemen. A very, very intriguing discussion, a lot of insights to take away. Thank you so much for being here this afternoon.
Thank you very much.
Thank you all.